What's poppin', investors? This is the account review for today. It's December 19th, 2022, and I'm sitting at an all-time low for the year. Not for the entirety of owning this account, but definitely hurts. Probably about 80 grand off the highs. So that's quite a big percentage. I'll show you the account. I'll do a full review of all the positions. This is a 100% transparent account. So if you have any questions about it, I'm more than willing to share any information about it, except my very private information, of course. I don't want you chasing me down in real life. If you do, I'm armed and dangerous, so don't even come close. I will do an account review. I'll show you all the positions in detail. And then after that, I'll go into the account tab, show you the health of the account. And I'm going to split the videos just like I did last time. I'm going to do my thoughts and log my thoughts in a different video. This is just going to be the account review. Jumping in, we're looking at 136,279, which is, I've never been this low this year. It's a 3.21% down day on the day. Very bad, severely underperforming the market. It's been a very difficult time to watch me severely underperform like this. I'm used to outperforming the market, but in the last month, I've lost 22.65%, just in the last month. About similar in the 3 months. Year to date, I'm down 26.75. On the year, 19.82. These are numbers that are higher than to the downside than the actual market measured by the S&P. I'll do a little relative comparison in a second. If you want to see the all-time chart, just remember I started investing in 2018, August 28th, which is somewhere around here. And this is the performance since then. It's only about 88% right now, which is still outperforming the market by some miraculous measure. I don't know how. Well, this is around the highs right here in August 2022, and now I'm down to 136. I'm nearing halfway to the account. I mean, I've almost lost 50% of the account. It's crazy. So quite a big loss on the books here in unrealized gains for the most part. But I'm going to realize some of those, I think, in the next couple of weeks, depending on what happens, to try to at least tax loss harvest a little bit. I'm not going to explain what that is in this video. This is just account review. One interesting thing you'll notice is that my buying power is no longer $10. It's $43,000. Now, this is because I had sold some cash secured puts and they expired, and I returned the collateral basically to Robinhood. They thank me by increasing my buying power. As I noted in the previous video in the notifications, I had a margin call warning telling me that if I go below my margin maintenance level, they will issue a margin call for my account where I will have to either deposit money, which I won't do, or sell off options, sell off anything, which I will do if I have to, in order to keep the health of my account intact. So because the options expired on the 16th of December, now I have returned to a more survivable level. But it doesn't mean that the losses won't go on. In fact, they will go on because I'm almost 100% leveraged. If I go here in the investing tab, you'll see that I'm sitting at 113, almost $114,000 that are borrowed from Robinhood, and they have the effect of multiplying the downside of my account if I happen to be red. And it's not very good because both of my biggest positions, Apple and Smith & Wesson, have been absolutely decimated and considerably crippled and have been bleeding, like insert your joke analogy here. Here are all my positions. First, I'm going to go through the options. If you pause the video, you can see all of the information disclosed here in those little boxes. So I will scroll down quickly. You can pause at any time to review the exact position. And these are my equities. I only hold 5 positions in my equities at the moment. Apple at 700 shares. Realty Income at 442. Main Street Capital 963 shares. Paramount 1200. Another one that's been a thorn in my ass. And then Smith & Wesson 8,500 shares. I actually didn't have that much of a down day today, which is a bit encouraging. It's a sign that perhaps a large portion of the selling is over. So we'll see. I was actually thinking of selling 500 shares today. I did not do that. In fact, I did something that's much worse, which is I bought 5 puts to protect on the downside over here at the $7.5 strike price. But it occurred to me right after I did it, and this is a huge mistake. Well, it's not a huge mistake, but it's a mistake because I'm thinking, okay, I'm throwing away $50 to protect against just 500 shares worth of losses. I should have just sold those 500 shares and have a much better effect. I mean, the price not only has to go down to 7.5, but it has to go a little bit below that to capture the premium that I'm paying. So it has to go far below 7.5. And if that happens, my entire position is screwed anyways. What is 500 shares worth of down movement going to do for me? Absolutely nothing. So in fact, I should have sold, and I may do that tomorrow, 500 shares in order to improve my survivability even further in the account. What haven't we covered? We've gone on the investing tab. This is the position sorted by total return. Apple's still in the green. This is my longest held position, I think. Realty income in the green as well. It's been a champ. Mainstream capital down $1,200, but remember those. I've received many dividends from these two, Realty income and Mainstream capital. So even if I'm around zero, it doesn't mean it's not a profitable position. These top 3 have paid me for a long time, so I'm really happy that I'm holding them and they've been doing their job. These bottom 2 are supposed to be kind of like swing trades. Smith & Wesson is a little bit more of an accumulation trade, but I just saw severe undervaluation here, and I decided to pull the trigger by selling some puts, and this is where it's got me. Now I'm stuck with all these shares, and I do like the companies still, therefore I haven't sold them because I like the companies. But the fact is that Smith & Wesson has lost me $38,000. Paramount has lost me $13,000 of unrealized losses. And now I have a problem in my hands. It's a much bigger problem to have than have gains and be sitting on unrealized gains, right? Unrealized losses is much worse. Let me tell you that. Over here in the top right, you'll see a little green message about the retirement account. I'm eligible for Robinhood's IRA 1% match. I'm not going to participate in that. I will probably make another video describing why I think this is pretty risky and why I might eventually move out of Robinhood, because this is a ticking time bomb on multi-decade level in the future, where Robinhood is setting itself up with massive liabilities. I will explain that later in a different video. Back to the investing tab. What else is there to do? I basically shared everything on the account. Oh, I haven't compared it to the S&P 500. Let's see how the S&P did measured by SPY. SPY is an exchange-traded fund comprised of the top 500 American-based companies by market cap. Market cap means market capitalization, which is the size and price of a company. So today it was only down 0.86%. On the week, down 7 point something. 3 point something in the month. If you remember, I was down 22 some percent. It's just incredibly bad. I mean, these depressing times are here. 3 months is about even. The market is even in the last 3 months. It's incredible. And for the year, it's only down 16.23%. Now, year over year, it's a little more than that because of this, December miracle run here in 2021. Some people are guesstimating, it's an actual word, that we're going to have another Santa rally. I'm not so optimistic, especially with the bleeding that I've seen lately. There's no reason for me to believe that, considering a lot of the market is driven by the Federal Reserve, and they've continuously decided to increase the base rates, interest rates, and so it's causing a real down-to-earth re-evaluation of everybody's stock holding portfolio. And on top of that, I know a lot of people in real life that control a substantial amount of money, and they're telling me they're mostly in cash. That tells me two things, okay? The market probably still has some further downside to go, but I don't know. I don't want to take that chance. I'm much more afraid of missing an upturn rather than minimizing losses. Personally, I know not everybody is like that. Excuse me, no edits here. But another thing it tells me is that there's a lot of potential energy. So if things start looking up economically or the conditions improve for the markets, I know that many of these individuals in real life that I know, who are probably not alone in keeping large amounts of cash into their brokerage accounts or savings or in treasuries, will turn over and boost the stock markets violently upwards like we've never seen before. Well, maybe except the 2020 rally or something. So this is the conclusion of my account review. I will make another video of my thoughts about today and what I'm thinking about, and maybe some lessons that I'm trying to draw from current situation and market conditions. That's it for now. Peace out.